Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat and European processing potatoes. I'll start with Paris milling wheat. Now the double top pattern, which was seen in Chicago and Kansas City wheat, though not in Minneapolis wheat, is evident here, but not as imposing. I placed potential targets for the recent April to May double top. Initial target X was in the 201 and 3/4 area, whilst the full target X1 would be in the 195 even area. I also pointed out that a key point would be how the move under the 50% Fibonacci line at 206 1/4 happened, as there wasn't much underneath until target X. Well, as you can see, back at the end of May, the drop below the 50% Fibonacci line of the August 2020 to January 2021 move at 206 1/4 was swift. Prices dropped to reach target X and then swiftly moved back up, which was satisfying in its own particular way. Anyway, reaching target X has been enough on the downside, as target X1 is a full target which in a lot of cases is not achieved, and so they will both be retired after today. The subsequent move back up exceeded the recent 50% Fibonacci line at 212 3/4 and only really petered out against some of the lesser Fibonacci levels at 217 3/4 and 218 3/4, or if you want, the lows of late January, early February in the 216 area. Take your pick on which answer you prefer. I think there is much of a muchness. We've since started heading lower, and the market here is now asking the same question we've seen asked elsewhere in the grains. Is this action since the May high a bearish halfway hesitation for potential target X, well, not even a potential target X, but a potential target in the 188 even area? Or is it a lopsided looking better if you discount the May spike down, actually if you discount that one, a lopsided double bottom? The bearish shift pitchfork upper time currently at 210 1/4 and simultaneous with the overhead long moving average for the May to June move lower is still working after a rocky start, but I wouldn't hold my hopes up on that one. Is there some other pattern delving that I need now to recognize? It's all a bit of a question still. Maybe next week will make it clearer. London UK feed wheat. As I've mentioned over the last few weeks here, not quite a double top here we've seen in other wheat contracts over April and May. In the process, the market made an unusual horn top in early May, with one leg, the first leg, being a bearish gravestone doji. Anyway, the market has fallen since this horn top, holding and bouncing up from the now broken April 2020 to date uptrend, currently at 194 3/4. I don't think this uptrend was solely responsible. The long moving average just above eroded the bearish pressure and the uptrend just finished it off. However, the rise was ably stopped early on in June by the now declining medium moving average, and that was really quite well done. That's around about currently at 201.30. And we had the second leg down halting only this week on the middle time of the newly drawn bearish May to June shift pitchfork, currently at 185.35. However, I'm inclined to think that the rising September 2019 to date uptrend, currently at 183.90, and perhaps more importantly the big old 50% Fibonacci line of the August 2020 to May 2021 move at 188 even, had more to do with it, rather than just this new upstart and relatively untried bearish shift pitchfork. Anyway, what now? Well, I think there might be a little more available on the downside if the appetite for it is there. If the market can successfully convert the 50% Fibonacci line away from support and into resistance, then that might be on, and the potential for a possible bearish halfway hesitation over the May to day action could result and move down to where target X currently sits. Now, please be under no illusions, I am not in love with this idea. It is an option for the current action, and this pattern suits it for a few more ticks lower. The actual target X is rounded down at about 180 even. The alternative would be perhaps that we saw what we saw back in March and April, Consolidation on the 50% Fibonacci line, maybe a small bottoming pattern or action before a renewed move higher. To be honest, given where we are, I'm not sure which is the more preferable idea, or the one to more likely happen. European processing potatoes. One of the features I have of using continuation charts on futures is that you occasionally get huge gaps after changeover. This market is another example of just that. The market was going sideways in the 13.8 area, then suddenly a huge gap up. Not that I'm complaining of the direction. As you may recall, I highlighted a bullish bow tie at the beginning of May, which would indicate a possible move higher some 15 to 20 trading sessions after the, let's be honest, imperfect crossover of the moving averages. They were in the wrong order. The kick-in was due between the 24th of May to the 1st of June, and dutifully you had such a move up, if only because of the changeover at that time. What is interesting about the latest move up is that despite some large gaps, the bullish Andrews pitchfork for the November 2020 to March 2021 action is still valid. All that happened is that the market moved up from the middle time, currently at 15.2, to test the upper time, currently at 19.8. and fail, at least so far, in breaking out through this resistance. So what now? Well, the move lower will be tempered indeed, has already shown signs of aversion from the 50% absolute Fibonacci line at 17.5. That I suggest may be the first significant support. Meanwhile, overhead we have the important July 2019 high at 21.1. I know it's quite a wide range, but with limited information of what we can see around here, so I'd rather wait and see what patterns develop. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.